Hello. My name is Taylor. I'm a financial coach and I help my clients organize their cash flow using Monarch Money so that they can save more money, pay down debt, and spend more on what they enjoy most. I get these questions around retirement contributions and investment transactions probably every time I do a personal one-on-one consultation with people. Because there are some weird things that kind of happen when you have investment transactions syncing into Monarch. And so I'd like to go through this today so that you know how to, one, plan for your retirement contributions in Monarch and where the limitations are because it is a little tricky. And two, to make sure your data is clean so you're not getting overwhelmed with all these investment transactions that come in when you have your investment accounts connected. So first off, we need to decide if you actually want investment transactions. This is a big ordeal and big question because I honestly don't think it's super necessary for most people. I don't run into a lot of use cases for it, but they have this feature, and so I want to go over it. So when I say connecting investment transactions, like you can always connect your investment accounts. That's always a given, and you'll always get the balances as long as it's connected. Mine say disconnected because it's a demo account, but your balances will come in. They'll have current balances. The difference is whether or not it has transactions. So, for example, if I click on this guy into the 401k, I'm seeing transactions. We see all these dividends, the buy, the sells, the contributions, and all of that stuff. If you don't have your investment contributions turned on, what you'll see is just the balance. And if you click on this, there will not be any transactions. You might have your holdings in there. That's just fine. That'll always sync, but you don't have transactions yet. So pros and cons. One is, I guess, if you are trying to use goals related to your investment accounts, you have to have transactions on. If you're trying to use the goal features. Now, I think goals is really limited. We're all hoping for an update from Monarch on goals. And so I don't use goals a ton. I honestly tell people just track balances right here and you're good. That's all you need to do. But if you are really wanting to see those transactions, then awesome. We're going to turn those on and I'll show you how to do that. But here's the end result, right? If I go back to this account, what you're seeing is a ton of clutter. We have all these buy, sells, dividends, and all these things, and they will show up in your transaction page. They are going to be mixed in with all of your other transactions, and that can be really annoying. But if you want your transactions to be feeding, what you're going to do is click on this button right here to open up your settings, or down below, or just going to find your settings, and you're going to go to preferences. In preferences, you have right down here investment transactions in beta. Sometimes you will already have it turned on. They will turn it on for you sometimes. If you're like, hey, I don't want this anymore, maybe turn it off and see if it'll stop the syncing of transactions. But this is where you can toggle this on and off whether you want it or not. So really key thing, if you are most of my retirees, like the clients I work with that are retiring, we are recognizing income when it hits the checking account. So when you make a withdrawal from the checking account, we are usually not running reports based on dividends, interest, or capital gains, or any other the sells and all the stuff that you do within the investment accounts. It's usually just when we transfer funds to the checking is when we want your cash flow reports to show what your income is and what you are spending and how you are faring against income versus expenses. So if you're that person, then you probably don't need investment transactions. Honestly, it's so much clutter. There's a lot going on, and I'd probably just leave it and don't do that. But if you are wanting to get reports on the capital gains, the interest, the dividends, and that's what you're using as income in retirement, and you're withdrawing everything as you get it in retirement, then absolutely turn them on. Make sure you have those categories set up. That's awesome. But again, if you are like most folks and you are just going to withdraw funds in retirement, you probably don't need investment transactions. If you are still in your contribution phase of life, when you're still contributing to your retirement accounts, you probably don't need transactions. You are contributing to these accounts. And we probably don't need to see the receiving transaction saying, hey, it's been deposited into the investment account. Now, with goals, there is a retirement goal, right? You can create a goal around retirement. Here's the thing though. You can only use this goal if you do have investment transactions turned on. And it is limited. It is very limited how it shows up, meaning there's not a lot of data or useful information that happens when we use this goal. It's not really worth it to me. But here's what happens. So with the 401k, right? If I went back to my accounts and I'm looking at all of my 401k contributions, if I wanted my 401k contributions, and this is maybe if I have my 401k connected, these contributions may be coming directly from my paycheck. So they otherwise wouldn't show up in Monarch at all unless I had transactions showed up, right? Because it's coming from my paycheck, so it never hits my checking account, it just goes straight into the 401k. If I wanted this to show up into my goals, and I'm going to use the employer contribution here because you might see those as well. I'm going to use that as an example. If it says no goal here, it's not going to show up in goals. If I add it, if we click on retirement here, what's going to happen is it's going to add that 250 right here. Now this would actually show your whole balance, not just contributions, but for the sake of this demonstration, it's just showing our current balance. So it's a little easier to look at, but you'll notice that there's no history, there's no data. It's not showing you, hey, this is how much you've contributed to retirement. So it's really fairly useless. And if you were marking these things as transfers, so they're not an expense and not income. So again, if we were going back to that 401k account and we're marking these contributions as a transfer because they're not income, then they're not going to show up in your reports either. Now, this arguably could be income. Both of these could be, right? You may want to, if this is your pre-paycheck 401k contribution as an employee, you can mark this as a paycheck, right? Because this is part of your paycheck. So you absolutely can do that. I would recommend that you create a new income category called 401k contributions. Maybe one for you and one for your employer, but I would make a whole new category for this, and here's the reason why. All right, so now if I were to run my reports, and I'm going to run my reports for last month because it's April. So I'm seeing my paychecks and it's just everything right there, but I also want to see my 401k contributions. Here's why I think it's useful to keep these separate. If you want to see, so if I include both right here, and it's now showing all of my income, including my 401k contributions, and then I also have all my income. So it's showing me a little bit closer of what my savings rate is. Now, because we don't have, the savings rate is really designed to be a net pay savings rate. It's not really designed to be a gross pay. The reason why is there's no way to bring in your paycheck deductions, your taxes, your health insurance, and all this stuff. Now you can manually do that if you really want to. That's so much work, so that's totally up to you. I definitely don't. I don't necessarily recommend it. So this savings rate is designed to be net pay. But if you're trying to make it gross pay, then we are missing some stuff, right? You're missing deductions and all the things. So that is something to be aware of, but it's getting us closer to an accurate savings rate because we're actually seeing 401k as income instead, like what's being contributed into the 401k. The reason why I want you to keep it separate though is because there could be a time where you want to see, well, how is my cash flow doing with the amount I'm actually receiving on a day-to-day? Because remember, this is going off into retirement. We're not actually getting this income. And so you may want to exclude this to see, well, how am I doing with the income I actually get into my paycheck and into my checking account? And you can only run that report if you keep these separated. If you put this all in paychecks, then you can't figure that out, and it will be really annoying to you as you're trying to figure out, well, am I actually doing okay with the money I actually receive every month? And so I recommend having a whole new category for that if you're going to mark those contributions as income. Now, things that would another hypothetical here. So, well, first of all, I'm going to go into budget. I'm going to show you what this looks like. So if I went to April's budget, because I've attached these things to the goal, it is telling me that, hey, you contributed $1,250 to your goal. Now you would want to mark that income, right, as income, right? The employer and the employee, if you're going to attach both to the goals or just the employee's contribution, you do want to recognize that as income so that you can budget with that. Otherwise, your budget's going to be really short, right? We would need to actually keep this into your budget and put it toward that retirement goal down below so you have enough to budget with this. You can also leave both of them blank and just not add them to the budget and just ignore it. But then at that point, it's like, well, why are you bothering with it in the first place? So it's just up to you. Now, Uh, I really rarely see folks trying to budget, track, or do anything with their 401k pre-tax, pay, the contributions. Unless you're a business owner, you're actually seeing those transactions move from your bank to their 401k. If you're an employee, I rarely see people doing this, so I'd probably just not do it if I were an employee. If I were you, I would not track this as an employee. But maybe you want to track like contributions to a Roth account. That's really normal because the Roth account money is sitting in your checking account and then you send it to a Roth or an IRA or some other brokerage, right? Some other account. Maybe that's what you're wanting to track. You can absolutely do that as well. Inside this. Now there's two ways to do it. One is turning account transactions on, right? Like if you want to turn on your investment account transactions on, we can see those contributions coming in and out, and we can attach them to a goal and called retirement, and you can kind of see those. Now, again, you can't really run a report on this, on what you've contributed, unless you're categorizing it, right? Because if it's a transfer, there's no report you can run on transfers, unfortunately. I wish there was, but there's not. So the only way we can run reports on contributions is if it's a category, whether it's an income like we did here, or an expense category. And so when we contribute to a Roth, let's say, or an IRA account, okay, let's go ahead and I'm going to go back to reports. Actually, we're looking at last month, and I'm just going to look at my transactions right here. So I can see right here that this is money leaving my checking account. Let's say I contribute $7,000 to a IRA account, some kind of IRA account. Usually we're going to mark this as transfer. And the reason why is we don't want to mark it as expense. If we mark it as an expense, then it's going to affect our savings rate, and our savings rates would be way lower, right? If we added $7,000 to as an expense, then our savings rate is going to dramatically drop to a negative, right? A negative savings rate, which is why we usually mark these things as transfers. However, if you're someone who really wants to be tracking, hey, how much did I, run a report, how much have I contributed to my retirement accounts, you may want to mark it as an expense category. You might want to create an expense category called retirement savings contributions. And look what that does to the reports here. Notice that total expenses just went up dramatically. We have this huge chunk of, of cash flow leaving the cash flow report here, and we have a very negative savings and savings rate. Okay, so obviously this is not an accurate savings rate anymore, because your savings rate should not include your savings, or your expenses. You should not include your savings as an expense. So it's nice though when you're running a report and you're saying, okay, well, where did my money go? And you can clearly see, okay, well, hey, I spent, let's say I'm going to go to this total report here. We're going to refresh this page. This happens every once in a while. We're seeing the total amount of retirement contributions right here. And it's like, okay, this is how much I contributed so far this year. But if I wanted to see my savings rate, what I would do is just exclude that category. Super easy. So that way you can track it, you can run reports on it, and you can also exclude it when you want to see an accurate savings rate and it's back to normal. So it's really up to you how you want to do it. Transfers is technically the way that probably Monarch would want you to categorize it, is categorize it as a transfer. But otherwise, you can mark it as an expense if you want to run reports on those transfers. Now, if you are receiving transactions, meaning you're getting transactions, and I'm going to show you in the 401k because I don't have one for the IRA here. But if you've contributed to your retirement account, let's say right here, this says buy, let's say you've made a contribution, this would probably just still stay a transfer. These are probably just still transfers. Now, here's the thing with all your investment transactions, okay? All the investment transactions, they're normally actually going to come in with new categories when you turn those on. You have dividends and interest for dividends, interest, capital gains, and all the stuff like that. And then at the very bottom, you'll have two categories called buy and sell. These are transfer type categories. That means they are non-expense, they are not income, they are not going to show up in your reports, they have no effect on your reporting, your cash flow, or budgeting, and all the stuff, okay? This means it's almost the same thing as hiding a transaction when you mark it as buy or sell. So you can use those. Here's the thing though, like I said before, when you add your investment accounts, it causes a lot of clutter. And for me personally, that clutter drives me crazy. And I also really don't care to figure out, because this is not going to be that simple for you. It's going to say purchase X or sold this. And then sometimes there's a lot of text and you can't figure out if it's buy or sell or not. So I'm just going to make your life a little bit easier. If you don't want to go through and categorize all those between buy and sell, sometimes it does it for you, which is great. you can totally just mark it as transfer. Just mark everything that's coming in and out of this, going on inside the retirement accounts as just a transfer. And I would do that by setting up a rule. I would create a rule, and I would, if your investment transactions are driving you nuts and you don't want them anymore, and you're just thinking this is just a giant mess, this is the rule I would create. I would create a rule, and we would turn on accounts, and I would click all of my investment accounts that I don't care to see transactions for. That means that I'm really only caring about these transactions when they hit my checking account, not any other time. So I would select all of my accounts, and then I'd update the category to just transfer. Yes, there are buy sell categories. Again, I just think it adds a lot more complexity as you're looking through your transactions to see buy, sell, transfer, and it drives me crazy. And that's just me. Maybe you like it, so keep it. Don't do this. But if you're going nuts with all of this, then make this rule. Make sure you apply it to all existing transactions. You're going to mass edit thousands of transactions. They're all going to be marked as transfers, and everyone's happy. And then you can be really diligent about, when you want to mark something as an income or an expense inside this 401k. But again, most people are going to treat all of these as transfers. Some people don't even see 401k contributions in here. Most people are going to treat all of these as transfers. Even for a majority of the time, these all should be transfers. And you can decide what you want to categorize and what you want as part of your cash flow reports if necessary. Just pay attention to how it shows up in the report, and if you feel like it makes sense, if you like the way it shows up, kind of like how we added that, the retirement contribution, it does change your cash flow reports. So just kind of pay attention to what is happening and if that is what you're looking for, the goal for your reports. I hope this is helpful. As you can see, there's so many different ways to handle the investment transactions and how to plan for retirement. And it's not perfect. There's definitely improvements that I hope Monarch makes in the near future. But we use these workarounds, and most of them are very sufficient for most people's goals. So feel free to leave in the comments if you have any questions. If you want to go over specific scenarios, please join our workshops. We do live Q&A, camera mic on. We talk through Monarch Money scenarios, including how to deal with investment transactions and how to properly plan for retirement contributions or plan for retirement withdrawals if you're actually in that stage of retirement. So thank you so much.